Unitedhealth Group stock took another hit today after the Wall Street Journal revealed that the U.S. is investigating the company for possible Medicare fraud. This adds to a series of government probes into Unitedhealth, including civil and antitrust inquiries. The DOJ's Healthcare Fraud Unit has been investigating Unitedhealth's billing and business practices since last summer, but the company claims it hasn't been officially notified and has criticized the reports as irresponsible. This news has caused UnitedHealthcare stock to plummet, losing nearly half its value in the past month. Amidst broader turmoil, including a sudden CEO change, the withdrawal of financial forecasts, and increased scrutiny of its Medicare operations, analysts are warning that recovery could take a long time. In this video, I want to take a look at the company's valuation, price charts, trend charts, and relative rotation graphs to get some idea of the stock price performance. Based on what I see, I think the risk to reward looks much better than in the recent past. I did enter a position on May 14th, then tripled that position the following day. Let's find out why. UNH has been on my watch list for about 5 years, but I could never justify entering for my particular portfolio because they've been trading at a very high valuation since I put it on my watch list. It is a very strong company with a long history of earnings growth. Over this time frame that I have shown here, they've had an average compounded annual earnings growth rate of 12.51, with only a few years where they had single digit or declining earnings, with the year 2025 being one of those. They did trade under their fair value, which is indicated by this orange line, from about 2007 until 2014, where they started trading above their average, with the exception of just a few quarters where they touched that fair value and would have been a good time to enter the stock. But for the last 5 years, they've been trading significantly above that value. Now, with the recent news, we've seen a large decrease in their price, which has brought it to be under fair value, which FastGraphs had it calculated on December of last year to be about $414. For the end of 2025, it's about $345, and they're currently trading at yesterday's close at $274. I'm going to narrow the time frame. We can see that they're currently trading at a blended PE of 10.58. They have an EPS yield of 9.46 as of yesterday's close. Just a month ago, they had an EPS yield of about 3.46. That would be not showing very good value. 6.5 EPS yield is good value. And now they're trading at 9.46 EPS yield, which indicates good value. They do pay a dividend now with a yield of 3.06%. Since I narrowed the time frame that we're looking at, their adjusted operating earnings growth rate over this time period is 13.52% per year. FastGraphs calculates their fair value at 15. The market places the value of 20.30 times on the stock. But the market appears to have changed their mind recently, because it's gone from that normal PE trading above that normal PE to a blended PE of now 10.58. Analysts have reduced their earnings expectations for 2025 by 17%. on average. They're expected to return to earnings growth in 2026 and 2027, double-digit growth. And an important thing to note here is the analyst scorecard, which does show that the company does meet or beat analyst expectations basically 100% of the time. So analysts do have a pretty good track record with identifying the earnings and Unitedhealth either meeting or beating those earnings estimates. So from a valuation perspective at this point, I think the risk to reward is looking very good. They've gotten down to a low fair value. There were a couple of early warning signs that some things may be amiss. Sometimes we have to take these with a grain of salt, and other times they need to be taken with more appreciation of how they're affecting the price. On February the 21st, it was actually the first report of Department of Justice investigation into the company's practices. The company stock fell about 9.4% that day. The price did recover after that initial report up to a high close of about $599 per share. And then they reported earnings on the 17th, which took the stock price down 22%. It was actually a pretty rare case where UNH actually missed analyst estimates. They missed EPS by 9 cents, and they missed revenue by $2.03 billion with that particular earnings report. And the company did revise its 2025 earnings to between $26 and $26.50, which was down from the $29.50 to $30 per share that they had provided in December of 2024. And this represented about 11% decrease in their earnings guidance. From that point forward, the stock took a large drop, 22% down on that report of their earnings, and since then has just been decreasing until we got to the CEO change and their pulling of their guidance. So that sent the stock down another 17%. And then we got the next announcement of the DOJ investigation, which sent the price down to a close of $274 yesterday. Another interesting thing that I saw was the RSI that went from nearly an overbought condition of 70 to an oversold condition of about 30. And it did that in just one day. There was also a MACD sell signal, basically the day before earnings. We were slightly above, but the day of earnings we entered into a sell signal and have been in that condition since. We also saw the money flow toggle from positive to negative on the day of earnings and has been negative ever since, but it has started to improve over the last day. We can also see the day before earnings that UNH was actually outperforming the SPY, but just a few days later it started underperforming the SPY in both momentum and relative strength, and has been underperforming since. The shape of this candle was somewhat interesting. UNH actually opened and closed at nearly the identical price, but we had a long tail to the bottom. So if we look at the intraday chart, we can see what caused that candle. On the 14th, the stock opened up just a little bit, but for the remainder of the day was all selling. And then the stock gap down yesterday, continued to sell off until about 10:52 in the morning. And then it looks like buyers stepped in and pretty much buying for the rest of the day. When we look at the Unitedhealth Group 5-year weekly trend chart, we can see that UnitedHealth began underperforming its long-term averages in February and has continued to do so, and it's increasingly getting worse. The midterm averages started showing weakness as far back as December, had pretty much been underperforming its midterm averages with the exception of 1 week. This also continues to trend downward. And then on the short term, it is underperforming its short-term averages for the last 5 weeks or so and have really spiked down in the last week. And the last thing I want to look at before we close is to look at the performance of UNH compared to the healthcare sector, XLV, and the healthcare providers industry group. So this is going back, looking at 10-week window. We're going back a year, and this is where UNH was performing compared to these other two items of interest. United Healthcare was sitting above the midline for momentum, but it was underperforming the SPY at this point. What you'd really like to see for strongly performing stock is to see it outperforming the SPY or the SPX in both relative momentum and relative strength. So what we can do here is just simply slide this over, and we can see that over time UNH was really outperforming those other two items of interest. But we can start seeing the downtrend, all of them kind of following a similar pattern. And the healthcare sector and the healthcare provider industry were actually decreasing faster than UNH. But we do get to a point here where the sector and the industry group are outperforming UNH. They even get into the leading category, which UNH failed to do. So it was underperforming the SPY, it was underperforming the healthcare sector and the healthcare providers group. And as we move slightly forward to the current time, we can see that UNH has completely reversed course and lagging the healthcare providers. It's underperforming the sector and underperforming the SPY. Interesting visual perspective on how UNH has performed over the last year in comparison to some other benchmarks. So that concludes my thoughts on UNH at this particular time. As I mentioned earlier, I did enter a position. I think the risk to reward looks very good right now. I think there's still some challenges for United Healthcare, but I think it's worth the risk at this point. I am looking at the futures for United Healthcare. It does look to be up about 3 1/3% in the pre-market trading. We'll see how that holds and how UNH performs over the coming weeks and year. I wish you the best in your trading. I hope you have a great day. If you would, please, if you haven't subscribed already, please subscribe to the channel. Give it a like if you found it helpful, as this helps support the channel as we provide this type of analysis. Thank you so much and have a great day.